Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham. Today we're going into week 39 of the weekly numbers. This is as of today, April 19th, 2025. So this week has been very good for gold, and I have increased my allocation to it. You're going to see in this video as usual. So let's get into it. So we have our current portfolio net worth at $489.26. And again, this is as of April 19th, 2025. We have our portfolio weekly data for week 39. This is from April 14th to April 19th. We have a net cash flow of minus 6 cents. I did do a rebalance in this, so increased my allocation to gold, so likely a little bit of money came out. We have a money-weighted rate of return of 2.78%, positive 2.78. It's mostly all gold right there. We'll go over that. We have a market gain of $6.58 and no dividend earned. So you see this spike up in the chart. This is just portfolio gain from gold alone. Great week for gold. We have our portfolio monthly data for week 39. This is from March 19th to April 19th. We have a net cash flow of $30. That was this large spike right here, which was like right before tariff announcements, and then it collapsed. That's when Trump tariffed the entire world all at once, and then the market collapsed. So that's what that net cash flow is, and then immediately after it collapsed. We have a money-weighted rate of return of 0.57%. We have a market loss of $1.85. And we have dividend earned of 52 cents. So despite that crazy ass announcement, we've been coming back up, trying to recover, get back to our all-time high. We're not too far from it, which is good. We have our portfolio quarterly data for week 39. This is from January 21st to April 19th. We have a net cash flow of $120. So every 3 weeks, that's a $30 deposit. So we have, every time we see a stair step kind of spike up in this chart, that's where our deposit is. So we have 1, 2, 3, 4. And this one was abysmal right here. So far, the two worst that I've seen is this one back in February, where it's just come down. And then this one right before tariff announcements, where it sharply came down. We have a money-weighted rate of return of positive 1.91%. We have a market gain of $5.76. And a dividend earned of 77 cents. So despite all this crazy volatility, gold has been our shining star, so to speak. Then we have our all-time data for week 39. This goes back to July 21st, 2024, till today, April 19th, 2025. We have net cash flow of $464.84. So it's going to be every time we do a deposit. So the first initial $100 back in July. And then every third week after that, $30 deposit. So we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 12 deposits. So we have $360 worth of auto deposits and then $100 of initial deposit. We have a money-weighted rate of return over that time period of 9.60%. Almost back into the double digits. Even though our portfolio just absolutely collapsed. So did everyone else, unless you somehow knew Trump was going to tariff the world all at once simultaneously. We have a market gain of $24.42 and a dividend earned of $2.05. So this is our all-time data since the beginning. All right, doing great. Ooh, pardon me, still early. We have our portfolio weekly data for weekly percentages for week 39. As usual on the right, we have our target weights. So I've increased gold to now 35%. So I'm pushing the upper limits of what I'm going to allocate an asset to. So gold at 35% with our GLD ETF. Commodities at 15% with our USCI ETF. Government bonds we reduced from 20% to 15% with our GOVI ETF. US dollars, we have 15% with our UUP ETF. US dollars has been horrible. Stocks at 15% with our RSP ETF. and Bitcoin at 5% with our IBIT ETF. So now we look at our gains and losses. Gold up 4.70% for a market gain of $7.63 in the week. Like I said, gold's doing great. Commodities also were doing pretty good, up 4.70%. Did I say that right? Yeah, I think it did. Commodities up 4.15% for a market gain of $2.95. Bonds up 1.03% for a market gain of 79 cents. US dollar down 1.42% for a market loss of $1.03. Stocks up 1.90% for a market gain of $1.34. And Bitcoin up 6.88% for a market gain of $1.56. I don't know how Bitcoin's doing, but it's crazy. Gold and commodities are doing the best. Keeping commodities at 15%. I do think there will be increase in commodities over the long term with these tariffs. I don't think it'll be as widespread as when we printed trillions of dollars back during the pandemic, but it'll be still inflationary overall. So we'll likely be seeing a rise in commodities, but gold definitely. Portfolio monthly percentage for week 39. Gold up 10.66% for a market gain of $15.33. That's up 10% in 1 month. Phenomenal gold performance. Commodities down 3.16% for a market gain of $2.72. So it was really only this past week that commodities had a bit of a turnaround. And we'll see that on the charts. Bonds down 3.30% for a market loss of $2.65. US dollar down 3.68% for a market loss of $2.61. Stocks down 6.86% for a market loss of $4.73. And Bitcoin kind of flat, up 0.38% for a market gain of 9 pennies. Good job, gold. Bitcoin, sorry. Gold, good job, for real. So up 10% a month. Again, that's why I'm increasing my allocation to 35% now. I've honestly even thought about putting it up to 40% now. I'm gonna have to increase my upper limit. Originally it was like 35%. It's my absolute upper limit, which I'm at right now. I'm already thinking like, man, I should go to 40%. Gold's the only thing surviving in this right now. Everything else is taking a hit. If you need evidence of that, here you go. Quarterly data, look at this. Look how disgusting this looks. Gold, though, up 23.07% for a market gain of $28.07. That's in 1 quarter, 3 months. Gold up 23% in 3 months. Fucking great. Commodities down 1.42% for a market loss of $1.14. Bonds, we only have about 2 months of data with this new ETF, but it's down 2.82% for a market loss of $1.87. So this isn't a full quarter, just FYI. US dollar down 8.46% for a market loss of $6.58. Trump is killing the dollar right now. There's no joke. It's below the DXY is below the $100 range, right? The $100 range right now. Big round number. Stocks down 10.10% for a market loss of $6.55, and Bitcoin down 16.89% for a market loss of $4.12. So gold. That's why we have it at 35%, our biggest allocation. Now, portfolio all-time data for week 39. Gold up 44.11% for market gain of $34.14. Phenomenal. Less than a year of performance. It's up 44%. That's crazy. Commodities having a bit of a turnaround finally. Up 7.63% for market gain of $3.44. This bond data will be incomplete because we don't have a lot of data on it because the GOVI ETF is relatively new. US dollar down 10.82% for market loss of $5.67. Dollar's dying. Stocks down 13.91% for market loss of $5.74. Bitcoin up 30% even for a market gain of $3.54. Gold's up an additional 14% over Bitcoin now. It's crazy. So here's my position changes that I've been making since the beginning of the portfolio. You see every time I increase or decrease the position, you see I move the money. The most recent one this week was I reduced my bond position by 5%, and I moved that money over to my gold position, so I added 5%. So that's when we decreased bonds from 20% to 15%, and then we increased gold's position from 30% to 35%. Like I said, who knows? The way things are going, I might increase gold to 40%. Gold's the only thing holding strong, surprisingly. Not bonds, not dollars, which is why I have them in the portfolio whenever there's volatile times like this. But man, these policies are destroying bonds and dollars right now. It's crazy. It's the only thing I guess they can't manipulate too much, which is gold. It's the only thing doing good. So here's that transaction on April 14th. So I rebalanced, I changed it. So this is why I reduced reduced bonds by 5%, so 22.59, and I moved it over to gold, so I increased it 22.62. So here's the buys and sells, here's the date, here's the rebalance. There's always like a little bit of rebalance with the numbers, like $1 or $2, you know, but the main one is reduced bonds by 5%, increased gold by 5%. So that's the transaction for April 14th. We have our alluvium staking for week 39. We got current price of $12.32. We have total staked 12.34 ILV for a market value of $152. We have our vesting. Our very first vest is less than 100 days now from unlocking, which is nice. Going all the way back to July 2024. We have all our other vests here. And then we have page 2, the rest of our vesting schedules here. So every month I'll buy $40 worth of ILV tokens, and then I will stake it. And then anytime there's a revenue distribution from revenue from gamers, you know, I get my small little teensy weensy piece of that I get from this vesting, locking up my money. And currently we have no new ILV revenue distribution to claim. We have our 3 original payments of 0.024 ILV for a current market value of 29 cents. And no alluvium transactions this week. Man, I'm fatiguing today. So those are our weekly numbers. So now we go to our charts. And as always, we start with gold, which is doing phenomenal. Look at it just spiking out of this freaking range right now. All-time high. It's fucking crazy. What's the gold price at? 33.26. 33.26. I think it basically touched like 33.50, but 1 ounce of gold is $3,326. Fucking crazy. This is why I increased my allocation to gold. It's the only thing doing well. Everything else is either choppy or going down. The only thing doing good is gold. If you look at it in this trend going at least back to October of 2023, you know, over a year and a half, just doing great. And then just out of nowhere, just boom, out of this trend. This has to pull back at some point. I mean, this is just, when something breaks out of this trend, like when you have such a steady trend like this for so long, and then just boom, like a spike out of it, like, or a drop down, you know, like the trend has to get redefined, or, you know, it reverts to the mean, like it comes back to the trend. So in this case, at some point, gravity's got to grab hold of that trend and like fucking bring it back down, because this is crazy. Imagine if just gold kept going more vertical than this. That would be insane. Then I really would have to increase it to 40%. I don't know. I think there's going to be some consolidation around this. I can't imagine it going this like imagine if it goes to 4,000 an ounce. Like, that'd be fucking insane, dude. Gold is way overpriced. Granted, we had the previous administration, Biden, print a shit ton of money, which caused inflation everywhere, so gold went up. And then now Trump tariffing the world, which is causing inflation and issues. So now all this uncertainty for the past like 5 years, 5-6 years, you know, just like all this uncertainty, gold's just been thriving in it. Like, it had its little sideways, let's see, where's 2020? 2020 is right here. So where's March? Right about here. So this dipped right here. We had COVID money printing, you know, going up, and then kind of went sideways, and then just, man, actually right about here is really where the bottom was, start going up. So October 2022 went up, came back, and then just boom, took off like a fucking rocket ship. So all this uncertainty in the world is just great for gold. So we're at 35% right now. Man, I might do 40%. I don't know. This right here would have to pull back. This is too crazy. This is just too crazy. But gold is just doing phenomenal right now. Absolutely great. Commodities returning back above this trend, which is crazy. So we had this big drop, and then again, I'm telling you, these tariffs, I believe, in my opinion, just my opinion, this is going to cause inflation. I don't think it's going to be the same level of inflation as printing trillions of dollars, which caused everything to go up. I think it's going to be a little more specific to certain sectors and commodities and stuff, but still, it's going to affect commodities, it's going to affect prices, it's going to affect inflation. So, but the sharp drop, this is when we did this is when Trump tariffed the world all at once on the same day. Even the penguins in whatever fucking country it was, they all dropped, and then now it's reversing. It's coming back. So after they did the 90-day pause, I believe this is when it reversed. So, but if you look at commodities on this 5-year trend, just up and to the right, right? Just up and to the right. Look at that. Look at that trend. Just look at that yellow arrow, just up and to the right. Just commodities. This is what money printing and tariffing does to the world. Just makes commodities more expensive, right? So far now it's back above that trend. Only briefly, but it's back above that trend. So it's still overall bullish. Bonds. I'm glad to see a little bit of a reversal after this hard drop right here. Again, tariff announcement. Oh my God, the world fucking crashed. And then 90-day pause, and it started coming back up. So it's still in this bullish trend. Bond index going back to, we'll call it right about here, October 2023. Ironically enough, same as gold, right? Yeah, October 23. What a weird time it was, October 2023. What happened back then? We should look at that one of these days. Started in this bullish trend. It's very wide. This trend is very wide, right? But overall, if you look at it on a 5-year, this is back. I keep showing this. This is going back to the pandemic. Back to 2020, maybe I'll stretch it a little bit more like that. Bonds came down. This is where we did like the ZERP interest rates, like the zero interest rates, printed a bunch of money. Bonds came down. But now it seems to be finding this bottoming area here. It doesn't mean it has bottomed, but compared to all of this that happened, this has been dropping. But since that October 2023 appears, quote, appears to have bottomed. And it's going kind of sideways, but kind of up. A little sideways up action. So I don't know what's going to happen to bonds. I don't know. Is this bonds getting ready to fucking have their time? Like are the rates going to finally come down and bonds come up? I know those of you out there who want to get a home or whatever, you need the 10-year yield to come down. Hopefully below at least like 3%. Maybe mortgages will be 5% or lower at that point. You get lucky maybe. Then it'll, I think, kind of, my opinion, just kind of get demand going again for housing. But, rates are tied to everything, so who knows. But as of right now, hit this sharp drop. This is post-tariff. And then 90-day, 90-day tariff pause, and boom, reversed. So, some good manipulation in the market right now happening. US dollar, this is disgusting. Let's look at the DXY. I hate this chart so much. I hate this chart. This is January. Man. So this is post-Trump, yeah. Because election was the 20th, essentially, right about here. And then just boom, just came down. So very bad for the US currency. We're below the $100. So the 100 line, I should say. So here's the 100 line, right about there. And then we're below it now. So whenever we go below the big round number, people get all, people start talking about it. But this dude is destroying the US currency. Sucks for all of us who, use it, who rely on it. But yeah, it's not good. The DXY coming down. So we're at 15% with the US dollar. I can't imagine it going below like 95 or even 90. Because like historically, what would that be? Let's look at that. Historically, what would that be? So the last time we were below 90 was in 2015. So you got to go back to 2015 to be below 90, essentially. We kind of tapped the 90 line in 2018. We tapped the 90 line in 2021, and we haven't been below it. So we got to go back to like 2015. So if you look at post 2008, this was the Great Recession, the Great Financial Crisis. The dollar index came down, coming into it, right? So coming into it, like it was like a sign that the currency was weakening. Same thing coming into the post Japan crisis, coming into the dot-com bubble, down, right? So I don't know what's going to happen with the currency. All I know is that's bad. If you're an everyday American, or really anyone around the world using this currency, that's not good when it's coming down. It's an arbitrary number, this 100 line, but I think it would be good if it would at least stay above it. But it is coming down. It is coming down. So US dollar not doing good. You would think it would be doing great right now. Again, because there's so much volatility and uncertainty. Same thing with bonds. Although bonds are kind of having a reversal again. They kind of hit this bottom. They're kind of having a reversal, but not really. The US dollar just getting killed. Gold is our currency, is the world's currency of choice right now, clearly. Look at that. Boom. Look at that chart. It's beautiful. Stocks. Oh my God. We are never going to return to this trend. No, I'm just kidding. I have no idea. I have no idea though. Like, honestly, I have no idea if it's going to return. Let's look at the SPX. Yeah, so fortunately, my portfolio is pretty close to its all-time high still. It's not too far off, because it fell during all this volatility. But for your average person who's just invested in this large index, for you to get back to your all-time high, so here's all-time high. Here's where we're currently at, down 13%. Where's the lowest closing candle? So 18% was the worst loss. And right now, the closing candle's at 13%. So I'm like a percent or two off my all-time high. But for the average person who, even if you don't know what you're investing in, if you're like in a pension fund or you're a 401k, through your company or whatever, 9 times out of 10, you're invested in the just general market, like the S&P 500 or something. So your money's down over 10%. Your money's down over 10%. It's not good. My money's down like a percent or two, from its all-time high. Like if I look at my quarterly chart. So this was my peak right here. Oh, right at the $500 line. How convenient. But right now I'm at the where am I at? I'm at like 489. So 500 was my peak. My last deposit, my 489. So about $10 off my all-time high. So I'm not that far. Not that far. But for the average person who's investing just overall in the index, or God forbid, some of these single stocks that are having horrible turns, but you're down 13%, over 10%. You gotta go up a lot to fucking get back up to that, which is not good. So stocks are not doing good right now. So this is our equal weight index. What's the equal weight index? Our peak was back here. So you're down, same, 13. And about 18 was the worst. So equal weight index is just as bad, not as good. Still got to make that back. Stock's not doing good right now. And Bitcoin, eerily acting like a stable coin right now, going kind of sideways. Let's see what we look like on a Bitcoin chart. So we still have this long-term trend holding. So we got our 2017 peak. We have a double peak in 2021, and then we have a double peak at the end of 2024 and 2025. Maybe I should just do a double arrow. Can I do a double arrow? I'm going to do a double arrow so people kind of get it. There we go. Kind of a double. Very close to each other, but there you go. So kind of just how I had these peaks, but right now we're down here. So I don't see Bitcoin really coming back just yet. Especially with stocks, how they're looking. Just looking absolutely horrible. The only thing looking good right now is gold. Gold is looking fantastic right now. Look at this fucking chart. If you ain't owning gold right now, what the fuck are you doing with your money? Like seriously, I'm not even like joking when I say that. What are you doing with your money right now? Stock market's down. Dollar market's down. Unless you're owning foreign currencies, but like US dollar's down. The global reserve currency's down. Bond market's kind of at its recent cycle lows. You know, maybe finding a bottom, maybe, but not really. Commodities are relatively good. You know, especially if you're using the USCI index. You know, we have the CRB index here. But the best asset by far is gold. Why the fuck would you not own gold? I don't get it. I guarantee a lot of people out there do not own gold. I absolutely fucking guarantee it. And you don't need to own physical gold. You know, you could own an ETF. I own an ETF. I show this every week. You see my ETF. I don't get why people talk about gold every fucking day. What asset is doing better right now than gold? It's crazy. Like, it's just a fucking shiny rock, but god damn is it valuable right now. It's just crazy to me. Why don't you own gold? Why don't you own gold? Even if it corrects right now. Even if it corrects right now. It comes back. Look at this uptrend. Going back to November of 2022. Look at this uptrend. Over 2 years. You've missed all this for over 2 years. Back here when gold was, you know, just about like under $1,800 an ounce. You missed all this. Now it's over $3,300 an ounce. It's almost doubled. It's almost doubled. From 18 to 3,600. It's almost doubled. It's getting close to doubling in over 2 years. Why the fuck have you not owned gold? I think it's going to correct off this because this is stupid high right here. It's just way out of this range. But like I said, even if it corrects, how much could it correct? Even if you look at gold volatility right now, you know, I say this relative, it's only at 24. I'm using air quotes. It's only at 24. It's not super bad. You know, back here in 2008, gold volatility was like way up here in the 70s, it looks like. You know, then in 2011 it spiked. 13, you know, as much as these spikes, you know, there's a spike here that happened, but it was a spike for people buying. Like if you look at right here, this spike right here, this is March 28th to April 14th. Let's look what happened. March 28th to April 14th. Here we go, March 28th. Right here. So it came up, came down, and then boom. Right? So even though there was high volatility, which you might think might lead to selling, which it can be, especially when the volatility gets high, dude, it's the volatility of people buying. It's the volatility of people buying gold. That's why I think, like I said, this is going to correct. Because people are just getting crazy right now to buy gold. Like, because it's the only thing going up. So I just, man, I don't get it. Why the fuck don't you own gold? I'm not calling anyone dumb, but like, man, you've missed it. I don't know if maybe saying missing it's not the right thing because it's still going up. You know, it's still going up. For the past like 2.5 years, it's still going up. But like right now, it just boom, just out of this trend, just crazy out of this trend. So I don't know. I want to bring this trend down actually a little bit. So I want it to be right there. I want these lines to kind of sync up a little bit more. There we go. Actually makes it look crazier when I do that. But this is crazy. This is crazy. You could just buy the GLD ETF. I've increased my share to 35%. I'm not 100% in gold. I increased it to 35%. So you don't need 100% gold, but dang, why wouldn't you want gold? Just don't get it. Why the fuck would you not want gold? I don't get it. I don't get it. And gold went up over 3% in one day this week. In one fucking day. Just crazy. Anyways, I do these videos every week. I hope that people get some viewers. I have like no subscribers, which is totally fine. I don't expect people to follow me if they don't want to. But where else do you see somebody at least showing you active management of a portfolio? Like, ask yourself that. Like, where do you see active management and you watch it for free? You're not paying for this. You already pay your internet bill. That's how you watch this. You're not paying me anything. But at least you see me have successes and mistakes and you can learn from it. Doesn't mean you have to copy me, but you can learn from it. But look at gold. Look what I'm showing you on gold. Who else is showing you gold right now? Who else is showing you how they're strategically allocating to gold right now? Right? Who else is showing you this? Right? Who else is showing you? I'm 35% gold right here. Everything else is 15% or less because I'm just less optimistic. So I have a 20% premium of gold on all this shit. I have an increase of 20% off of everything. Gold right now is killing it. I don't know what else to say. Really don't know what else to say. So, anyway, as always, see you next week for week number 40. Getting closer to that holy grail of week 52. The 1 year return. Can't wait to see it. Anyway, thanks as always for watching. If you have any questions, comments, or criticisms, let me know. And have a good day.